There are four types of pricing methods: first in, first out, last in, first out, weighted average, simple average. We comes to the first in, first out. This method is based on the assumption that materials which are purchased first are issued first. It uses the purchase of first batch of materials purchased for all the issues until all the units from this batch have been issued. After the first batch is fully issued, the price of the next batch received becomes the issue price. Upon the upon the, upon this batch also fully used, the price of the still next batch is used for pricing, and so on. In the other words, this batch is also fully used. In the other words, the materials are used at the oldest cost price listed in the store's ledger account. 2 points should be noted: materials are charged at the actual cost price and at the oldest price of the materials in the stock. Stock of materials in hand is valued at the latest purchase price. Advantages of the FIFO method: this method is based on the realistic assumption that materials which are received first are issued first. Materials are issued at the actual cost, thus no unrealized profit or loss from the use of this method. Closing stock valuation is at the cost as well as the latest price market price. This method is quite simple to operate and easy to understand. Disadvantages: materials are not charged at the current market price. Therefore, in terms of rising prices, charge to production is unduly low. This method sometimes produces unfair results, as between one job and another. When the transactions are large in number, the price fluctuates very frequently. The method involves more calculation and increases the possibility of errors. In periods of rising methods, the FIFO method produces higher profits and results in the higher tax liability because lower cost is charged to production. Conversely, in periods of falling prices, the FIFO method produces lower profits and results in lower taxes because they are derived from a higher cost of goods sold. FIFO next LIFO method. The method is just reverse of FIFO. It is based on the assumption that last purchase of materials are issued first and earlier receipts are issued in the last. FIFO method uses the price of the last batch received for all the issues until all the units from this batch have been issued. After that, the price of the previous batch received is used. The students should note that in actual practice, materials used to production may not be from the latest lot purchase. This is only a bookkeeping method and must not be confused with the physical method of issue used by the storekeeper, who always tries to issue the oldest stock first. The important points of this method are: issues are priced at the actual cost and at the latest prices paid. Closing stock is valued at the old prices and is completely out of the line with the current prices. Advantages: the value of materials issued is closely related to the current market price. As materials are issued at the actual cost, it does not result in any unrealized profit or loss. When the prices are rising, the higher prices of most recent purchases are charged to the production. This reduces profit figure and results in an income tax saving. The disadvantages are: although the stock is valued at the cost, the price is that of the earliest materials purchased, so that the stock value doesn't represent its current value. This method is not realistic as it does not conform to the physical flow of materials. Like FIFO, in this method also the material cost of similar jobs may differ simply because the prior job exhausted the supply of lower price stock. This renders the comparisons between the jobs difficult. When the prices fluctuate very often, the calculations complicate the store's account and increases the possibility of clerical errors. In times of rising prices, profits and tax liability under LIFO would be lower than the FIFO method. In the periods of falling prices, the closing stock would be valued at higher price and thus profits and taxes would also be higher. And the next method is average cut methods. These methods are used on the assumption that when the materials are purchased in the different lots or stored together, their identity is lost. Therefore, these should be charged at an average price. Basically, average prices are two types: weighted average and simple average. Now let us go with the simple average method. Simple average price is calculated by adding all the different prices and dividing by the number of such prices. It doesn't take into the account of quantities of the material while computing the average price. Advantage: the only advantage of this method is that it is simple to understand and it is easy to operate. The main weakness or disadvantage is that materials are not charged at the actual cost. The unrealistic profit or loss will usually rise out of pricing. This method is unscientific and usually produces unsatisfactory results. The value of closing stock may be a negative figure, which is a quite absurd. Weighted average method. This method gives due weight to the quantities held at each price when calculating the average price. The average weighted price is to be calculated by dividing the total cost of material in the stock from which the material to be priced could have been drawn by the total quantity of the material in that stock. The simple formula for the weighted average price at any time is the balance value figure divided by the balance unit figure. Advantages: this method evens out the effect of widely varying the prices of different purchases. The new issue price is calculated only at the time of each new purchase and not at the time of each issue. This reduces the work of making calculations. No unrealized profit or loss arises. Disadvantages: where receipts are numerous, this method requires a good deal of calculations. Issue prices generally run to a number of decimal points. Materials are not issued at the current market prices. See, now we will look at the examples of each of the methods of the FIFO, LIFO, simple average and weighted average. Now we will look at the example of first in first out method. In the purchase units, the columns are rates, amount, sales units, rate, amount, balance units, rate, amounts. Purchase units 500 at the rate 10, 5000, 100 at the rate 15, 1500. And when the sales accounts 550, first sale 500 for rupees 10 at the 5000, and next from the 100 units we take out 50 units, it's become price of 15 and at the rate 750. And next the balance and the balance and the balance amount would be the 50 units at the rate of 15 at the amount of 750. At the first year ending before the sales, the total balance would be at the 600, combining the amount 6500. When the sale accounts out of 550, 500 taken off first purchase units and 50 taken off second purchase units. FIFO, last purchase goods can be sold first. Purchase unit, rate, amount, sales amount, rate, amount, balance units, rate, amount. First we have purchased 200 at the rate of 10, 2000. Secondly 100 at the rate of 15, 1500. Sales units 250. 100 we have to issue the last purchase goods first. 100 at the rate 15, 1500. And from the 200 we have to take 150. Out of 250 we have finished 100, then we have to take 150 at the rate 10, 1500, and the balance amount would be 50 at the rate 10, 500. Weighted average means the total amount divided by the total number of units. We have purchased firstly 200 units at the rate of 10, total amount 2000. We have purchased secondly the units 200 at the rate of 15, 3000. When the sale accounts, we have to combine the total average, means total amount by total number of amount. We have to combine the 2000 plus 3000 divided by total number of units, that is 400. So the rate becomes 12.5, and the saleable units are 50. The amount becomes 625. So remaining units are 350 at the year end. At the price of 12.5, it becomes 4375. Simple average means the simple average means total. Simple average means two amounts divided by two two m two rates divided by 2, it becomes the simple average. In this example we have firstly purchased 200, secondly purchased 200 at the rate of 10, at the rate of 20, it becomes 2000 and 4000. If we combine the amounts 2000 plus 4000, it becomes 6000 divided by 6000. 6000. If we combine the amount of the rate at the rupees 10 plus 20 divided 30, it becomes 30 divided by 2 becomes the 15. After the selling of units of the rate of 50 rupees, at the units 50 at the rate of rupees 15, which we got averaging 20 plus 10 divided by 2. It is also the same price for the balancing amounts at the year end. At the rate 315 to 15 equals to 5250.